Do you envision yourself retiring early? Would you like to discover if you can turn your fantasy into a reality by investing in Tesla? No need to search any farther. We've got you covered. Many investors have been wondering if Tesla's stock could be the key to an early retirement due to the company's recent sharp increase in price. This video will examine the possible dangers and rewards of investing in this massive electric vehicle company, as well as how much Tesla stock you'll need to retire by 2025. So fasten your seatbelts and prepare to discover how Tesla can assist you in reaching your financial objectives. I'd like to extend an invitation to you to hit the like and subscribe buttons, so put your notepads and pens away first. Did you know that if you own a specific number of shares of Tesla stock by 2025, you could be able to cruise into early retirement? It's no secret that a lot of people think Tesla will allow them to retire early. Those that are intrigued by this concept ought to track the company's advancement to see how Tesla could assist them in realizing their objectives. Watch the video below to find out how much Tesla stock you'll need to buy in order to retire by 2025. The question of whether Tesla's stock is undervalued or overvalued continues to divide supporters and detractors of the company. In actuality, Tesla has collaborated with other businesses to grow its customer base and output. Adam Jonas, global head of research at Morgan Stanley for cars and shared transportation, has high praise for Tesla. Given the $2 million delivery estimates for this year, Morgan Stanley raised its $1,200 to $1,300 price estimate for Tesla shares. Morgan Stanley analyst Adam Jonas has long been an enthusiast of Tesla. Though he has raised worries about the business's valuation and the possibility of more competition in the electric vehicle market, he has usually been bullish about the company and its future potential. Goldman Sachs analyst Noel B. Delaney has also been largely positive about Tesla. He upgraded his price objective for Tesla from $780 to $860 in a research report dated February 2021, noting the company's robust demand and the possibility of greater adoption of electric vehicles as justifications for his optimism. Credit Suisse analyst Dan Levy is less optimistic about Tesla. He reduced his rating on the stock from neutral to underperform in a research report dated February 2021 because of worries about the company's valuation and the possibility of more competition. He did point out that Tesla is a market leader for electric vehicles and has a strong brand that might support it through any difficulties. Even Dan Levy, who maintained his strong outlook for Tesla shares, increased his price target from $1,125, saying that the stock's current decline represents a great opportunity to buy. Levy thinks Tesla will outperform the forecasts of Wall Street. Even American investor and well-known stock picker Cathie Wood predicted that Tesla would be valued $3,000 by 2025. Wood is the creator, CEO, and CIO of $60 billion investment firm ARK Invest, which focuses on technologies like genomics and self-driving cars. The price of Tesla stock should rise above $2,500 by 2025, according to one expert's prognosis. However, this prediction shouldn't be completely ignored because it was based on a detailed analysis of the EV company's past market performance and predicted future growth. The leading EV manufacturer's stock price is expected to rise in response to higher sales, and if this prediction comes true, Tesla investors may see a substantial return on their investment by 2027. There's enough to be positive about. Similar to how Apple makes the iPhone or how Microsoft uses Intel chips and Dell PCs, Tesla builds cars by developing software on custom hardware. Contrary to the conventional auto industry approach, where the product is fixed for the duration of ownership, Tesla is able to update the software capability of its cars on a weekly basis. With fewer parts than internal combustion vehicles, Tesla automobiles have a much lower total cost of ownership because they require fewer expensive tune-ups, silencer repairs, and oil changes. This is known to traditional automakers, who get a large percentage of their revenue from their service divisions. With only about 20 pieces per vehicle, Tesla's battery-powered automobiles are significantly simpler than conventional internal combustion vehicles, which are estimated to have 2,000 parts each vehicle. Customers' total cost of ownership is significantly reduced as a result of this simplicity. Additionally, Tesla plans to incorporate cutting edge battery related technologies into its vehicles and has purchased battery manufacturing companies, both of which could lower the cost of ownership. Even while other manufacturers are making an effort to get knowledgeable about electric batteries, they will still be trailing behind in this growing sector. When at it from a marketing standpoint, Tesla clearly has an edge in several areas. Who wouldn't want to drive an environmentally friendly car that emits no emissions and saves them from having to stop at petrol stations? For the foreseeable future, other manufacturers will probably find it difficult to catch up on this front. Given the circumstances, what action should a manufacturer take next? In 2020, more electric vehicles will be available from conventional automakers. However, these might not be software cars. Instead, they're frequently regular cars that have had electric motors added. Of course, much like any other connected item, software automobiles can have security vulnerabilities. But if Tesla could show how to properly handle these risks, it could solidify its position as a market leader. How do you feel about purchasing Tesla stock? While most people are unaware that they'll need a solid financial foundation based on profitable investments in order to retire comfortably, no one can truly say they aren't looking forward to retirement. For example, it could be lucrative to invest in growth companies if you bought them at a high enough price. Tesla is working hard to demonstrate its accomplishments to detractors as well as investors in order to meet the high standards that investors have set for it. Tesla plans to build a sports car, an affordable car, and other vehicles with the money it has raised. The company, according to ARK Invest, has been creating useful AI solutions and has revealed the Optimus humanoid robot. It is anticipated that by 2026, the robot taxi industry will account for 60% of Tesla's estimated value and produce over half of the company's EBITDA. By 2026, they predict that revenue from electric vehicles will account for 57% of the company's overall revenue, despite having much lower margins than revenue from robo-taxi services. By this point in the simulation set, Tesla may have made a name for itself in the industry. Its success suggests that the EV company will continue to do well even with the drop. Many Tesla bulls, according to Annuity.org, aspire to be affluent retirees who have been faithful to Tesla and support the company's mission of creating a cleaner, greener world. Consequently, the corporation might eventually offer a solid retirement plan. In order to live comfortably in retirement, you will require at least $4,100 a month on average, as the median retirement income in the United States is approximately $47,500. $4,100 a month may be sufficient in certain places to pay for necessities like rent or a mortgage, utilities, groceries, and travel expenses. But $4,100 a month could not be sufficient in other places or for people with more expensive tastes or pastimes. $4,100 a month might cover rent or a mortgage payment, utilities, groceries, transportation, and some entertainment or leisure activities, assuming the average cost of living in the United States. The precise distribution of costs will, however, differ based on each case. It's crucial to make a budget based on your income and personal spending to find out how much $4,100 can buy you each month. Many Americans are opting to spend their golden years in nations like Panama, Mexico, Costa Rica, Portugal, and even Thailand because of arbitrage, which allows retirees in the U.S. to make their retirement funds go much further in those locations. If you want to retire in 2030, but need at least $4,000 a month in retirement income and want to remain in your current country, you'll need at least $50,000 in savings adjusted for inflation using a standard 5% withdrawal rate. This suggests that you will need to have at least $1 million saved for retirement. That's great news because if Tesla continues to be successful, its shares will increase in value over time. This implies that even if you continue to spend 5% of your retirement savings year, your funds will last for a very long time. If your financial goal is to retire from the workforce by 2030, buying Tesla shares is likely the finest investment you can make right now. In summary, a $1 investment made in November 2011 would be over $204,000 today if we travel back a few years to November 2016, when Tesla was trading at just above $38 per share. This is because the stock has increased over time from $5.74 to $12.29. Compared to a similar investment in the S&P 500, which yielded a return of 35.74%, this represents a return of over